Okay, so this will be our 24th public webinar. Before we move further with anything, let me first go on with the legal disclaimer right here on screen, suggesting that all content presented here would be purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading or investing, then you yourself will be liable for your profit, loss, or loss of profit. And now that we are done with the disclaimer and legal stuff, let me get on with the quick introduction about what we do here and what is this all about. My name is Nirav, and I'm the owner and admin of 50is.com, which is the website where I publish my views on the markets, commodities, indexes, stocks, etc. etc. You can check my previous analysis over here. I also offer personalized classes, that's training program LT, as well as a recorded video course for which you can find details over here. And I have been able to manage a track record of 80% plus for 5 years now. So this will be edited here, and 2020 will be added in front of this. So before we move further, let me just quickly go over the track record. Publicly, you can find a view of the same by visiting this link 50is.com backslash forecast dash accuracy. Here you will find all the years of analysis with the links, the date, and what was said, what happened, and additional comments. So as you can see over here, 2016 accuracy 83.34, 2017 87.5, 2018 84.6, and 2019 is 84.88. Obviously, this all is public. It's all posted on YouTube, so there is no room for anything here. It's just all legit. You can verify it all yourselves. Last is the 2021, for which I have to publish on this weekend, but I have it at my own backend, so we can just go over it for a moment here. So this is the 2020 accuracy that is completed by now. I still have to put the links for the articles and videos over here, and then I can publish it. So maximum 24 to 48 hours, it will be on the website at the same link 50hours.com backslash forecast accuracy. So you can then check it over here. But for now, here's the track record. Total number of analysis 61. That did not work out as 7. That which worked out are 54. And 54 divided by 61 makes the accuracy as 88.52. So now we have an exceptionally big track record, not just 1 month, 2 month, or 1 year or 2 year, but straight away consecutive 5 years in a row. And all of it is public. So there is something you can always check by yourselves. So I just wanted to get this word out, and also wanted to point out that this page or this link, this forecast accuracy link, should be shared by you is what I'm requesting. That way more people will become aware of my work and the levels of accuracy they can achieve if they learn the same techniques. So that's all for accuracy and stuff. Again, you can just check it by going to 50hours.com backslash forecast dash accuracy. And if each of the viewers here or those who watch it on YouTube afterwards when it's available as recording can share it with the 4 or 5 people in their group, then we can have a good reach. So that's what I'm requesting. Just share it in your circles personally, like emailing or word of mouth to 4 or 5 people. This link itself should do. Additionally, you can check everything here or on my website what additional services are, like the video course and personalized classes. So moving ahead, talking about the webinar. Again, this is a point which is a bit important here because this will be the 24th webinar. So that means this has been now 2 years of me conducting these public webinars where literally anyone can join in by signing up from my website and basically see all the things live before they are posted on YouTube. So in addition to the recorded videos posted on YouTube, there's also the public credibility that comes in from doing this in front of people. So again, I'm just trying to show that all of this is done in a completely legit way. This 24th webinar marks the completion of 2 years of me conducting these applied elite wave webinars. And the way we proceed in these webinars is I go on through the discussion of crude oil, gold, S&P 500, Nifty, and if we have some time, then we also look at some stocks. After I've discussed each chart, I will then ask you guys if you have any problems or questions regarding the same. You can then post them in the comment section, and I will make sure that I answer whatever query you have posted. So that is the general way we proceed. Other than that, it will be better if you wait for me to complete my comments, because if you do put some comments in between, then it might just stop the flow of my thoughts. So that's the only thing I like to point out again. Let's just start off with this webinar. And before we actually discuss the chart, just give me a final nod that you are able to hear and see whatever is on the screen. A final confirmation, and then we will begin. Hello, Kaiv and Saju. Thank you, Paul. Of one or two more confirmations so that we are sure, and then we can begin. All right, so guys, let's start off with our discussion. And first of all, let's have a quick look on crude oil. Before I discuss the current counts on screen, which are sort of clear already, let's quickly have a look at what I discussed in the last webinar. So the recording for the same can be found on my website, as I mentioned, 50eyes.com, and on the bottom left, this is the last webinar, which was December 2020 to January 2021. So anyways, let's just look at what we discussed for crude. So here's our discussion on crude oil, and my view was, as you can see over here on the screen, that I was in the expectancy that wave 1 was here and 2 is complete. So longs is what we were expecting. And as you can see, this red dotted line is the trigger line. That is to say, the conservative longs would be once this trigger line is taken on the upside. Now let's have a quick look at what happened. And the date for this discussion in December was 28th 12 2020 is when it was posted. So going to crude oil, and 24th is what we will mark. So this is where the price was, and previously, as you just saw in the recorded webinar of last month, the 2 was over here, and the count was suggesting longs above the level of 49.20 or whatever this high is, right? This particular high, I mean. So now that we look at it, I've just moved the 2 from here to here. It doesn't really change our trading strategies or the counts. But as you can see, the market did go straight up and did give a good enough movement for crude oil, a movement of about 4.254. Let's just say 4 points is quite a okay movement for this period of time. So this is the analysis which was done in the last webinar, and it played out perfectly fine. So that's again one good thing. Now let's look at the current scenario. That is what I'm thinking of this market right now. So at this point in time, I am under the impression that we may have a wave 3 over here. And for those of you who are not much familiar with the Elliott wave, I'll just quickly go over the little bit basic stuff. And the basic stuff, I mean that the structure of an impulse is like a 1 up, 2 down, 3 up, 4 down, and 5 up. So this first leg up is called the 1, the second is down, third is called, of course, the 3, fourth is down, and then the fifth one, which is this one, is called wave 5. So if we just look at this rough structure, we can say that this 3 is over here and this 4 is over here. And I'm assuming that wave 4 is almost complete because it has gone down to the most likely retracement region, which is 38.2 retracement for wave 4. So I'm assuming that it is very likely that this structure is about complete or will be completed in a few bars or ticks or whatever you call. So, anywho's, if this wave 4 is complete, then of course we are going to see this fifth leg up, as I just pointed out in the rough structure. This fifth leg up should take the prices higher than the last high. So that means we are expecting a movement higher than the level of 53.863. And because I'm assuming wave 4 is complete, that means the strategy is more or less buy it with a stop loss. And I believe that it should not really go below the level of 50.30 if it really is indeed a correct count. So that means that going long over here with this much is the profit potential and this much is the risk. Although I will have to say that risk can be varied, like stop loss can be adjusted based on your position size as well. But technically speaking, wave 4 shouldn't really retrace very deep, right? So just assuming that and going with this stop loss is one thing. Second thing is that I'm still biased on the long side, but the second thing that I can think over is that this may very well be 1 and a 2, and then a 1 of a lower degree, and then a 2 of a lower degree. In which case, it can go a little bit lower than the expected support level, which I was previously talking about, of 50 point something, 50.3 or 50.2. So that is one possibility that we need to keep in mind. Considering both the possibilities, I will have to say that conservative longs are sort of not really possible here. Wherever you take the longs here, there will be a bit of risk involved in this market. But the chances of this market going higher are pretty strong. So strategy wise, I would say that going long with smaller position and adding on later, keeping both these views in mind. That is the first main view, which, as I just discussed, 1, 2, 3, 4, 5, that is straight up from here. And the second view, that it can go lower for 1 here and 2 here, so, and then up. So that means putting up strict stop losses will not be a good idea here. However, of course, you have to consider the risk and hence the stop loss thing as well before taking the trade. So more or less, to conclude this analysis, we are expecting longs, manage risk accordingly, and whatever longs you take, target minimum will be 53.88 or 53.9, let's say. A little bit higher than that. Of course, it can go much higher as well, but I'm just mentioning the target minimum over here. So that's all for this view on crude oil. If you guys have any comments, you can just type them in the chat box. If not, just type in clear, and we can then move ahead to the next chart, which is of gold. Thank you, Paul. What about the other participants? Are you able to match up with my pace? Should I slow down, or did you even understand what we discussed? Kindly confirm the same in the comment section or the chat box. What about you, Kai? What about you, Precha? Dukan? Okay, Saju. All right, Precha. I'll try to explain things a little bit slower. So yeah, so let's move on to the next chart of gold. Now that we have checked out crude. So before again moving the current discussion, let's quickly check last discussion of gold, which was here. So the gold discussion, let me check if I can show anything with the video recording here. So yep, so you can check this recording later with audio, but I personally checked it, and the view, I even recall what the analysis was. It was pretty simple. So the view last time was that if there are longs, they should be taken only above this high is broken. Unless this high is broken, there were no longs. That was the upside view, and the second view was about bearishness. We were expecting that we might see X wave either complete or continuing, and then one more leg down. So basically, long above this high, And if this is not triggered, then we will look for bearishness below this level. I think I might be able to play the webinar video, and let me check if I represent that in the video itself. All right, anyways, you guys can check it. These levels are already mentioned in the webinar. I checked it before starting off this one, and I've even marked it over here. So around this level, I was expecting that if the market goes below it, then we will be looking for shorts. We will not be shorting, but looking or planning for shorts. And as I discussed, the upside level was above this high. This was the high of 1965 or whatever it was. It was never breached. As you can see, the alert line which was drawn over there, it has not been triggered. So basically what I mean to say is that whatever we discussed in the last webinar was that longs only above this high is taken, and shorts, we are not going to take the shorts, but we will analyze the market for shorting if it goes below this line, whatever that is. Let's check 82.26 something, right? So now looking at the chart, it did not go above it, so longs were never triggered. And as for the shorts, it has gone below this line, so we will reanalyze now. Basically, last analysis did not give us any clear trades. So let's look at what's going on in this market right now. I think 4-hour will be better. So those of you who are not really much familiar with Elliott wave, I'll just quickly point out that the pattern I am following over here on this chart is a complex one, and roughly speaking, it would look like this: A, B, and C, and we call it W over here. And then there's an X, and then again A, B, and C for a Y. So W is complete in 3 waves: A, B, and C. And after X, you again get 3 waves: A, B, and C. So in this particular chart, we have completed the W. X is either complete or it may be continuing. However, the important thing to note is if this count is what we call correct or what is being followed by the market, then as you can see over here on the right hand side, we expect the market to go below the W low. That's the main takeaway here. So if we expect the market to go below the wave W low, then we will first check where the W low is, and it is at 1762. So that means we are expecting that the market can go below, or not can, should go below 1762, or actually it's 64.17. So 1 or 2 points is here and there, doesn't really matter. But below this level, and then how will it do it? It can go either sideways, that is within this price range, and then fall, or it can just go straight down. So basically what I'm trying to say is that as per this analysis, our view is that this market should go lower than the low of 1764 something. Let's see if we can get a little bit more deeper. I will just remove this drawing here. So as you can see, I have just discussed the same thing with my labelings over here, expecting either sideways movement and then a fall, or straight down fall. And of course, the stop losses will again remain the same. This trigger will now become your stop loss, right? Of course, if you take short positions, you will reduce the stop loss based on your risk management levels. That's something you will have to manage on your own. But technically speaking, that is the invalidation level for this count. Not really invalidation, I would say that X can become more complex, but for the sake of trading shorts here, we need to verify a good level where we will consider the counts incorrect. So we will consider that this is a extremely high risk zone, and if it goes above it, we will try to reduce our positions or get out of it. So this will be taken as our stop loss level now. And the market, as I just said, we are expecting levels below 1764. So I would say pretty much simple over here. And secondary thing is this X can become a lot more complex, and it can just go like something like this or even more complex. Basically trying to say is that deceiving us by going higher than our technical stop at once and then lower, but that remains to be seen, and I'm not really in alignment with that count. That is, I do not think that that is a very strong possibility, so that's why I have not represented it on. So that's our take on gold, right? Lower levels expected, and pretty much straightforward here. So if you guys have any query, you can just post them in the comment section. I wouldn't say it's a rule, but almost always it has gone below the W in my observation over the many years and thousands of charts that I've done. So that's based on the observations. I will just go with that saying that it will go lower. Is there any other query on this chart? If not, just please type clear over here, and then we can move on with the next chart of S&P. What about the other participants? I don't see clear from you guys. Kaiv, Dokan. Okay, so thank you, Saju. So, okay, so let's move on to our next chart, as everyone seems to be clear on this one. S&P discussed around 2348. So let's check. And to those who would be watching this recording later on YouTube, do turn on your video quality to 1080p, because in lower qualities the dark backgrounds will not look nice. It will look a lot blurred. So it's important that you just click here and just turn it to 1080. Anyways, moving on with the analysis of S&P, we had multiple counts discussed here, but the main idea that I had from a shorter time perspective was of a diagonal. Let's see where that is. Yeah, this is the diagonal I was talking about in the last webinar, and I was under the impression that it can go a little bit higher and then fall, because it looked like a very clear diagonal kind of pattern. There were other ways to count, but my view being bearish, I was under the impression that this count is the main count, which is not what happened. As the market did, let's see what the market did. As you can see, we did discuss the bearish count, and there was a bullish alternate that if it goes above 3800, above this dotted red line, then we will look for bullish possibilities, but our main count was bearish. So let's just go back and check what happened actual chart. So we are on the daily chart, and let's check 24th. The diagonal which was over here has already passed on, and it did not lead to any break on the downside. So I would say that that analysis or our main hypo in last webinar did not play out. So let's now look at what I am saying at this point in time. Given the fact that this price action still looks a little bit too much of sideways, not sideways, I would say choppy, that is overlapping previous bars a lot. If you look at these bars, they are overlapping price over here. If you look at this correction, it is overlapping here. And my point here is that there's a lot of weakness from a price action perspective over here. Of course, if it's a build up, then we will only come to become aware of it above 3900. But from my current perspective of the bearish count, I would again like to that this might still be forming a bigger diagonal, or not a bigger diagonal, but another diagonal, not the one which we thought in the last meeting. And for those of you who are not much familiar with the patterns, I'll just quickly point out the diagonal, or what we call in price action as a wedge, is just price getting price giving an overlapping structure between trend lines. So if you see something which is moving like this, that's what you will call a diagonal, right? So that's what I have drawn over here. So going ahead with this, first I'd like to just discuss the main idea here. The main idea is that we are seeing a diagonal pattern here. Once the diagonal is complete, we should see a break. That's our main hypo or hypo 1, as you can see in the CN color. And the second possibility is this, it's actually not the CN color, so I'll just change it for a second. All right, so the second possibility is that if this count is completely correct, then how will we know about it? For that, I'm going to say that close above 3905 or 3900. 3905 is better because then we will have more clarity. So above that level, a close above that level would suggest that this diagonal is invalidated. And then the market is having more upside remaining, possibly. But as I said, my main count or main hypothesis is still that we might be seeing a diagonal over here, and this diagonal can be followed by a downward movement. So simple enough. And this is, by the way, in alignment with our bigger picture count. Here I have marked the whole upward movement from here as a corrective leg. That is to say WX, YX, and Z. So that pretty much sums up our view here. If it's a diagonal, then we are expecting downward movement. Yeah, one more point over here, we can take this lower trend line, this trend line, as a guiding stick. That is to say that if market closes below this trend line, then we will look for shorting this market. So that's a very simple thing. Anyone can draw a trend line, and it will help out in this particular case, is what I believe. Secondly, we can just put a trigger below this level. So that's our cue for looking on the downside. And as for the upside, I've already drawn the 3905 level. Closing above it would mean that our bearish count is not the one being followed, and this market can have more upside remaining. More or less nothing much here. It's almost about the diagonal. That was the main thing. So if you guys have any doubts here, can you just type them in the comment section? Explain more about invalidation of diagonal. Now, we are not really talking about invalidation of diagonal here. I'm just giving the general opinion that 3960 is a strong resistance. Sorry, 3860. So that's why I'm expecting a reversal from there. The diagonals, as I said, they can just continue, right? It is possible that, let me show you what I mean. It is possible that this market just goes a little bit higher, and then the diagonal has to be adjusted like this, right? So it is possible that the diagonal is still following and it still keeps going higher at like 3900 or whatever, like 3960, and it's still a diagonal. That's also possible. We can't relegate it. My current analysis is based on just the fact that I'm expecting a reversal around 3860, and the market actually hasn't really given a close above 3860 on this daily chart. So for now, my analysis is holding out. So that's why I'm emphasizing the fact that the diagonal may be about to get completed. So in real sense, we do not have a proper diagonal here to figure out an invalidation level for it. Would that be a explanation satisfying your question, Precha? Okay. Actually, there are multitude of possibilities here. Generally, I do spend a lot of time analyzing the markets, but that is not possible to discuss in this short time we have. And also, that level of analysis I sort of like to keep closed for my personal batch students. So that's why I did not want to discuss all that and just stick with the simple possibilities. Moving on with this next chart of Nifty. Nifty was very clear in the last discussion, an exceptionally well played out analysis. Let's quickly look at the actual chart over there. Yep. So that was the main view on Nifty. We were expecting that the A is complete around 13,740 and the B is complete about at 13,250. Even though it did not look like a proper B structure, I was under the assumption that it is complete for various different technical reasons. And the expectation was that the market will fly high and complete an impulse in the upward direction, right? As you can see by these white lines that I've drawn, 3, 4, and 5, etc. So now let's look at the actual chart and see. That is let's go to daily for a clear view. Let's mark out 25th, 24th, 23, 24th. Yep. So this is where the price was when that last analysis was done. Here this vertical line is. And as I just showed you in the recording of the last webinar, the view was that the market should go higher. So if I remove everything from the screen, the drawings, we can say that, not say it, actually just went up straight, right? Daily closes were also in green mostly, except for these two sideways bars. And not only did it go up, it did go up from 13,700 something to 14,600, right? So almost 900 points movement. So I would say that was a pretty well played out analysis. Not well played out, precisely played out analysis. Now let's look at the current situation, leaving history to history, and see what I'm thinking right now. So you will see a lot of clutter here. I'll just simplify things. So what I'm thinking is that from this point, we may be seeing an A up, a B down, and this might be a 1, 2, 3, 4, 5 progression. And there are other counts as well, which are more fitting, like an impulse in the upward direction for as per this green count. But I will not like to go into much detail with it. What I'd like to discuss is this last part. So my analysis is suggesting that we may have the wave 3 of an impulse over here. 4 may have completed, and if this is the 5th complete, then this could lead to a fall in this market. Second idea that I have is that this is the wave 3 and this is the wave 4 continuing, possibly as a flat. That means only one more up leg is remaining, which will again be followed by a fall in the market. So my whole point over here in this simple analysis is that I'm expecting bearishness in this index. And a quick personal disclosure here that I'm already holding some short positions on Nifty. Aren't very big, but they are there. So just so you know, my bias, I am a bit biased towards the bearish side because I'm already holding shorts. Generally, I try to close my positions near the end of the month when I'm doing this webinar so that my views are completely unbiased. But in this particular case, I had piled up a good deal of profits from my executions on these shorts and these shorts. So I just left some of the profits in the short positions open. for the close of last session. So pretty much, uh, all I'm saying is that if the 3 is here, which I believe to be, then either the 4, 5 complete and down. And the second thing I'm saying is 4 is continuing over here. And then there will be one leg up remaining and then down. So more or less waiting for bearishness or going straight short if you can hold while the market goes in the wave 5 up is the strategy here. And pretty much that's all I have for my analysis on Nifty. I would say it's a pretty simplistic one. And before we conclude it, let me just quickly walk you through the bigger picture count so that you get an impression of what we are talking about here. So my impression is that this is a complex correction up, right? WXYX, and this will be the wave Z. So in a complex correction, what you have is a series of 333 waves joined by connecting waves X. So if you are new to Elliott wave and you are just learning this concept right now, then forget about all of that complex stuff and all that. Just think about the 3-wave structure. So this analysis is basically suggesting that if the X wave is complete here, there will be a 3-wave structure from here in the upward direction. If the X wave is complete here, there will be a 3-wave structure from here in the upward direction. So basically wherever the X completes, there's a 3-wave structure after it, is all I'm trying to point out. So in this particular case, we are assuming that this is the complete here. 3 waves, right? A up, B down, and C up. So 3 waves up. So that's our bigger picture count. We are assuming that the whole thing may have just completed over here or might be about to get completed. I guess that pretty much sums up the viewpoint over here. If you guys have any query, just post them in the comment section. Is there any favorable relationship between waves A and B? Yes, Ganapathyam. Wave A and B generally are equal is what we would like to check. If not equal, then B. Okay, you're talking about B and not C. Yeah, B generally can retrace to 38 or 50 to 61.8. But as I said, when we were doing this analysis in the last webinar, when the market was over here, I did tell that this B is unusual. It has not gone much deep and it has not gone deeper, not deeper, I mean, gone down as a very clear correction as well. So that's a bit unusual, but that is this B is not really following all the general guidelines we have for Bs. Neither has it consumed much time, nor is this pattern very clear. As a matter of fact, it looks like it might have been an impulse down in hindsight because it is such a strong close lower. So this is sort of rare exception, but we were able to catch it. I did say very clearly in the last webinar, as you can check, that even though this does not look like a proper B, I will consider that the B is complete here as the main hypo. I guess that pretty much clears out your doubt. What about the other guys? If you guys are all clear or not, just quickly let me know. What about Chidonkan, Paul, Saju, Dokan? I'm not really sure what the exact pronunciation is. Okay, so you guys are clear. So let's quickly have a look at the stocks that we discussed in the last one, which were what Axis Bank and Amazon. So first of all, let's is the ABC move A and C need to be of the same length? No, they don't need to be anything like that, Saju. It's just a guideline that they can be of equal length. So if you are having an ABC correction, then there's A length. You can measure it and project it from the end of wave B. So you get a rough target for wave C. That's all it does. It's not a rule. That is what I'm trying to say. So anyways, moving forward with the chart of what do you call Axis Bank, let's quickly check. Axis Bank was discussed in the last webinar, 4232. Yeah, so I recall it very clearly, but just for the sake of record purposes, I'm showing what was discussed in the last webinar. This was an exceptionally clear chart. And generally, I have multitudes of analysis on a chart, but this one I only had one analysis because I was so very sure. And my analysis was that this correction is complete here and this market should go higher. And by higher, I did not give any targets. I just said that it should go higher than 640, that is 640 plus. The reason I did not give targets was that I was trying to see if there will be a correction afterwards and then up, or if it will be a straight up, because the targets will change accordingly. Anyways, forgetting about the target, this movement itself was 609 to 640 was ample enough. 31 points to be almost 31 points, not exactly 31 points. 30 or so points is a very good movement in itself. And this was literally a very, very strong analysis, the kind of analysis I like to trade with big capitals. And by the way, I did traded this market long, right? And it was posted in our stocks underscore IN on Slack as well, which is visible to the training program LT members. So let me see if I can check where as exact. So here are the Axis Bank trades here posted in the Slack group. Axis Bank added longs January 7th. And what happened afterwards is it went up. And where have I exited? Booked partial profits, booked profits on all longs. So as you can see, this one was so clear. I did trade it, but I'm generally involved in multiple trades. So it's not always possible to take the whole moves, but a good amount of profit was made on this trade itself. Now look at the actual chart instead of the screenshots I have for the trades. What we are looking at is, let me just go to daily so as I can show you what the actual movement was after our option. So this is the vertical line from where the discussion was done in the webinar last time. After there is this one, you can see 1, 2, 3, 4, 5, very clear impulse up complete, right? And the movement up has been of, you can say about 79 something points. So 70 plus points, which is very decent. Now, after that, my view here is a bit, I need to do a little bit more of work on this particular chart. But roughly speaking, I am just waiting for this market to break below this channel, this CN channel, right? Once the market breaks below it, then I'll be interested in looking for shorting opportunities in this market, as I believe that big impulsive move might have completed over here. Impulse or corrective move might have completed here, not impulsive. Like a longer time frame correction from lower time. So basically all I'm saying is that I'll just wait and watch this market, and if it closes below this channel, then there will be obviously an alert, as I have placed one, not even one, just two alerts. First is the break of the channel and second is this price level. So once these alerts are triggered, then I'll reanalyze this market and see if there's a short setup for it. So basically I'm not really interested in going longs on it, and will wait for clear opportunity to short on Axis Bank. that would be all for it. That's all I had to say on Axis Bank. If you have any queries, you can just post them in the comment section. If you guys are understanding me and you are okay with my pace, please post clear so that I know that we all are on the same page. Break means close prices on wick level. Break by break, Ganapam, I mean that Ganapathe, I'm not really sure what the exact pronunciation will be. So of your name. So, but anyways, the break I mean is that close below this trend line, which has gone significantly lower. So I'm not looking for a wick, right? I'm not looking for a spike. That is not what I call a break. So if you can get a candle like this, let me be more precise here. A red candle like this, right? That is something I would call a break. And once there's the break, then I will wait for some sort of setup, like a corrective move up, like an ABC, and then a short after this low is broken, something like that, But for now, I'll just not comment something like that. I'll just wait for it. Once the market does it, then I'll look at it in the actual live market and see what to do. Okay, Ganapati. So that is, I think, clears your doubt. And one more point here, because you brought up the point of breaks. This because is a daily chart, the breaks will be more significant here, or should be more significant. I will not use the word will, because there are no specifics in the markets. If we were looking at a 15-minute chart or 1 hour chart, then there are times where you will see something like this, like a candle like this, and it's a false break. You will maybe go short or plan on doing something, but it doesn't work out. But because this is a daily chart, so everything here is observed by a multitude of traders, and everything here has more meaning. So moving on with the last chart, and that would be Amazon. That one also worked out, I recall very clearly. Actually, that worked out very, very nicely. Like it was a straight out analysis. Straightforward worked out. Amazon 4412. So this is the analysis in the last webinar. My view was that we might be forming a triangle pattern, right? Now, if we are forming the pattern or not is something that becomes clear in time. But at that point in time, my hypothesis was that it is likely that we are seeing a triangle pattern. And within that triangle pattern, again, for those of you who are not familiar with Elliott wave, a triangle pattern is a 5-wave structure, which is having A leg down. This is the A down. This is the B up, C, D, and E. So in that last discussion, I was expecting that we were in the wave D. So this D wave should go higher, right? And in 3 waves. So I was expecting A, B, and C. So short-term time frame, my view was that it should go high as represented by this line. Arrow, trend line, whatever you would like to say. So this is what my analysis was in the last discussion. So let's quickly check the actual chart of Amazon, marking the 24th December over here. So now it cannot be much more clearer than this one, that it just went up almost as if my saying it will go up made it go up. Just joking. So it straight out went up from here, right? And my analysis was that it should go up like this, like A up, should be the B down, maybe here, or actually let me check. Yeah, we were expecting, I think, the B over here. And my analysis was, I think, likely that it will go up and go higher than the wave A. So as you can see, it did not really go higher than the wave A. That is, it did not really fulfill the proper analysis that we did, or the exact thing that I was thinking. But this is very substantial movement, and if someone has seen a movement from 3191 to 3326, which is about 129 points, then I don't really believe that they would not be able to book at least some profit out of it. And in markets, we have to always be mindful that analysis keep changing. Markets are dynamic, and such is the nature of analysis as well. So, as far as I am concerned, I would say that this analysis played out perfectly. And looking at the current price action, I'll still like to go with the triangle pattern over here. No changes over there. Only thing is now I'm assuming that this wave B might be continuing a little bit in time like this over here. And this might be the 1 up, 2 down, 3 up, 4 down, and 5 up for the C. So pretty much this analysis is still working, and what we discussed on short-term basis also worked out. So perfect so far on this one. Anyways, one thing I like to point out over here is that if S&P really does give the bearish movement as I talked about in the main count a few moments ago, then it is possible that this count can fail, right? So be mindful of that, because if the main index is falling, then Amazon is the blue chip stock over in the US. So it is likely that it might follow with the counts of the index itself. So the point here being that if you do decide to trade accordingly with this analysis or go longs basically, then you should be keeping strict stop losses and managing positions accordingly. You should not expose your positions with too much risk. Like try to take hedged positions. That's what I'm saying. Pretty much that would be all for Amazon. I reckon that is basically all for our whole discussion so far. If you have any doubts on this chart, you can post them. And Precha, you can let me know how much did you understand here, as well as Dokan and Ganpati, because I believe you guys are not the regular audience I have in this webinar. So it will be good to know if you were able to follow through with all the analysis that we discussed, or how much were you able to follow through with. And what about the other participants? How much were you able to get it? And by the way, if you have any doubts on any of the previous charts we discussed, we can go through that as well. Not an issue. All the main charts we focus on have been covered at this point. That's good to know, Pracha. So I'm assuming everyone is clear here, because I don't see any doubts posted. So in that case, I'll just like to say that we have technically completed the counts we go through, and we have even almost reached our time limit as well. So at this point, I would like to take a few moments and request all of you guys who are in the webinar, as well as those who will be watching it later on, to share the forecast accuracy report. And again, pointing out to those of you who have missed the first part where I discussed my 5 years of track record, that these webinars, once they are done, are posted on YouTube, and you can check out the name of the index or whatever instrument is discussed, date, price level analysis, what I was saying, the video link, and what happened afterwards. So this is all completely legitimate track record. 83 for 83.34 for 2016, 87.5 for 2017, 84.6 for 2018, and 84.88 for 2019. The 2020 track record, as I said, will be posted within the 24 to 48 hours. So basically by this weekend, I will try to post it. It's been a very busy month so far. Lots of trade, and that's why I have not been able to post it. And what's the next thing? Yeah, this is the 2020 track record I wanted to show you guys. I just have to embed the video links over here. And total 61 analysis, 7 did not worked out as expected, 54 worked out, and our accuracy is 88.52, so which is almost 90%. right? And yep, my request here is that you guys kindly share it with at least 5 people in your personal contacts, like via word of mouth, by email or WhatsApp, or even if you can do social media, that's better. But I believe that personally sharing it with the individuals is a better idea to spread the word so that people know of my skill set and they know of a better way to trade the markets, which is what I use. And again, to point out, educational services, that is my personal training classes, training program LT is available. You can make the inquiries by going to website 50eyes.com and checking out the link 50eyes.com/training-program-LT. My recorded video course is available here. Again, you can check it on the website. And that's all I had to ask you guys about sharing. Thank you guys for attending. Thank you, Brecha. And once again, keep in mind the sharing thing. It's important. More participation is very much important to continue these webinars. So thank you guys for joining in, and see you next time.